little bit more on Intel this morning. Let's bring in Wedbush Securities' Matt Bryson. He does have an underperform on the stock, just lowered his price target by 5 down to 45. Matt, thanks for the time. Happy Friday to you.
Happy Friday.
Is the shortage element, I mean, it's a legitimate reason, but is it an excuse to cover for just less competitive chips?
I certainly believe it is a legitimate factor that is affecting everyone. Having said that, no, you look at Seagate today, just came out with as expected results. They're supplying the same data center as Intel is. They didn't cite chip shortages for problems either in Q3 or Q4.
So you think the rationale is specific to Intel?
I think that Intel has some specific problems, right? They're struggling with share, losing share to AMD, seeing Apple shift over to internally made processors. You just got an announcement from Alibaba that they're looking at internally made processors. So I think Intel is dealing with a lot of company-specific problems. The chip shortages don't make things any easier for them.
So is the way to think about this, Matt, that Intel manufactures many of its own chips, and having that more vertical, I guess, supply chain is adding to the hiccups versus some of its competitors that are outsourcing? And how does that picture continue to evolve, if so, when it is looking to expand its foundries and do more work for other chip makers as well, potentially?
So I think the way to think about it is it's not so much that Intel's affected or its direct competitors who are being affected that much, other than AMD was running into some problems, securing enough substrate, securing enough wafer capacity of TSM. Rather, I think the way to think about it is the PC manufacturers, HP Dell, server manufacturers, so Dell, Lenovo, what have you, that all of them are struggling to get the ancillary chips that they need to build products. So if they can't build a server, then because they don't have, say, a power management IC, then they don't need an Intel chip. They also don't need an AMD chip. But I think with Intel, those issues are compounding the share loss that they're seeing. And so the impact has a larger effect on them than it does on some of their peers.
Matt, the guidance on capital spending that people are focusing on, and it's going to be essentially deferring this moment when they're going to be able to harvest more free cash flow. Is there a concern just about the volume of what it's going to take in terms of investment spending, then they're in this kind of heavy investment phase? Or are we concerned about what the ultimate return on that investment is going to be? In other words, can they execute this sort of transition and this capacity expansion in a way that's, on the other end of it, going to bring back the era of, the more familiar high margins?
Yeah, so I think both of those factors are concerns. So I think in guiding for capex to come up, in guiding for gross margins to come down, that had been the primary reason for my underperform rating on Intel. Was simply I saw this big period of investment, which is the journey to them restoring competitiveness. But while they're going through that, they're also dealing with share loss, struggling to hold revenues higher, and so there was going to be an impact on free cash flow and earnings. And I think them guiding toward that gets that risk out of the way. To the second factor, what happens going forward, I think the concern migrates towards that issue where Pat Gelsinger put out a pretty ambitious outlook for 10 to 12% growth following 2022. You need to hit that growth in order to offset the increased depreciation costs. And we just don't get a whole lot of visibility into whether Intel's plan is really going to work until you're a year, 2 years, 3 years out from now. And so that's the concern, is that there's no visibility into the recovery yet. You only have visibility into the increased spend.
Yeah, I mean, so no hurry to buy the stock is basically what you're saying. You have an underperform rating on Intel. Where should investors put their money to work in the sector then?
So we still like AMD. I still have outperform ratings on Taiwan Semi and UMC. So you were talking about supply chain shortages earlier. Those companies are beneficiaries of the supply chain shortages, right? You can't get enough chips. Foundries are where chips are made. They're benefiting from pricing power tied to just a shortage of manufacturing capacity. And I think that continues to remain a factor through mid-22, if not into 23.